Well, Darren, who would then own an apartment property in New York? Okay, you're talking about 95% of the investors out there would say, dude, no way. I ain't going there. You crazy? I'm not doing that. 95+% of the investors would go there. But who are the 5%? Welcome to the Heartland Multifamily Show, the shorter, more profitable path to multifamily ownership and investing. Hey there, Darren Garman here, and welcome to the Heartland Multifamily Show, the place for all things multifamily. And we got a lot to cover on this episode. There's a lot of things going on out there. Man, you talk about a whirlwind of things going on, not only in the investment world, the multifamily world, towards the end of 2025 and into 2026. A lot of things going on. Globally, nationally, it is just one thing after another, isn't it? It's really, and something is new pretty much every day. Pretty much there's something new and something going on. And it's definitely very interesting, and it'll be interesting to see how a lot of these things play out. But one of the things I want to discuss with you today on this episode, what I call the Mamdani Effect. And I might not even be pronouncing the mayor's last name correctly. If I'm not, you can certainly correct me. Feel free to do that. Mamdani is unless you've been living in a cave, and sometimes I live in a cave, but here in Iowa, but he is the new mayor of New York. And you are already starting to see an effect, and I called it the Mamdani Effect, of him taking over as mayor in New York. And you really started to see this even before he formally took office, just in terms of conversations, in terms of maybe some trends that I had seen, and especially with conversations I had with owners, investors, managers in the multifamily space. But now you're seeing full effect, full impact, that what Mamdani was talking about in terms of, and I'll just put it this way for simplicity's sake, taking over the apartment industry in New York is not just a bunch of talk. They're already implementing measures to do that. So it wasn't just a political thing to say to get elected. This guy is moving forward with implementation. And a lot of that implementation has to do, again, simplifying this, has to do with really the taking of private apartment properties and distributing those properties to everyone. Okay, so really pretty much taking the apartment property from owner or owners and taking that and then distributing that apartment property to everyone. Now, of course, this isn't happening directly. It's not like there's a direct taking, but you can see when you read the room, that's exactly what's going on here. And they, him and his administration, have made no bones about this. This is what they're doing. He called it a warm collectivism, is pretty much what he called it. And so you are front and center seeing the Mamdani Effect. So let me give you an idea how much of an effect this has, because you're probably wondering, okay, Darren, is this kind of a political thing you're talking about? Are you going on some kind of a political rant with this? No, not necessarily. When I say Mamdani Effect, I mean there is an effect. So let me give you the one sentence, it's actually a question, on how this is an effect. Okay? All right, so let's set the stage for a second. Let's say you are an investor. And by the way, all of us in one way, shape, or form are investors. We're looking to put our money in places where it can grow. Okay, so let's say you're an investor and you're looking for a place to, what they would call, park your money. You're looking for a place to park your money. I come up to you on the street and I say, hey, give me the top 5 places that you are looking to invest your money right now. So if you had to think of 5 top places where you should be investing your money, where would that be? Let me tell you what the answers where they would typically fall. They'd fall in the hot stock. Let's say like right now, Nvidia, Apple. So there'd be like stock. There'd be like AI. Yeah, I should buy some AI. Maybe SpaceX. Maybe I should buy some of SpaceX. And then there might be some up and coming companies that are all of a sudden getting hot. And there might be other places like maybe real estate and other places like that, right? Okay, so far, no surprise. But let me tell you what answer would not come up. Apartments in New York City. That answer wouldn't come up at all. So if I came up and I said to you, hey, let's form a partnership. Let's pool our money together and let's go buy a bunch of apartments in New York. What would you say to me? Darren, you're crazy. Why would we? Do you see what's going on there? They're doing this with the property and they're doing this and this is going to happen and that's going to happen. I mean, it doesn't stop with just rent control and all this, but this is happening. They're going to be, you see what I mean? There's no way you would invest money in an apartment property in New York. There's no way you would. By the way, there's no way 95% of investors would do that. And in a nutshell, that's the Mamdani effect right there. The effect is run away, stay away, don't go there, and run as fast as you can. Now, of course, I'm coming to you from the frame of, like I said, an investor. I'm looking to invest. I'm looking to grow my money, grow my wealth. I'm not coming to you from a frame of, let's say I'm a tenant and all I care about is living in the least costly, cheapest place I can find. I don't care about investing. Investing's not even on my radar screen. I could care less. I just want to live in a place that's as affordable as possible. That's different. You're loving what's going on, right? You're loving what's going on. But if you're an investor, there's no way that you would invest any money in New York apartments, okay? So the effect is it drives capital. It drives investment away is what it does. Now, I'm talking about the sliver of multifamily, the multifamily apartment space right now, but it drives that away, okay? And anytime you have an impact like that, where you're not attracting, you're driving away, that obviously, especially when it comes to investment, that is obviously a huge problem. So that's the Mamdani effect in a nutshell. But let's dig a little bit deeper, you and I. Let's dig a little bit deeper on this because it gets interesting. So then it begs the question. The question then is, well, Darren, who would then own an apartment property in New York? Okay, you're talking about 95% of the investors out there would say, dude, no way. I ain't going there. You crazy? I'm not doing that. 95+% of the investors would go there. But who are the 5%? Who are the 3 to 5% that would be like, yeah, okay, I think I want to do that? That 3 to 5% really falls into only two categories. That's it, two categories. Category number one is what I call the social work owner. The social worker owner. In my book, The 9-Month Investment, I go into a chapter about the social worker owner. And by the way, in case you're misunderstanding me, I'm not disrespecting social workers at all. I've been around social work most of my life. My wife has a social work degree. I've taken many classes as I was going through college in and around social work, so I know all about it. All about it. So I'm not disrespecting it whatsoever. But what I am pointing out to you is I said, what? Social worker owner, not investor owner. Big difference. Social worker owner, not investor owner. So it's not a surprise if we describe the social worker owner as someone that is really more interested in helping the cause. Okay, I want to buy the building. I want to invest, manage. I want to be involved in the building, not because it's at the end of the day an investment that will pay me a return on my investment, but that it will pay me in terms of positive feelings I get by helping the cause. And the cause is, all about procurement of the property and distributing the property to as many people as affordably as possible. Okay. That's one of the, when it comes to that 5% of people that would look at buying in New York, want to buy in New York, apartment communities specifically, that's who they are. They are social worker owners, not investors. Okay. That's number one. And there's only one other class, number two. The only other class are people that already own apartment properties there and they're stuck. They're stuck. What do they do? Do you think that they can sell right now? Do you think there's a market for them to sell their apartment properties right now with everything going on with what I just described? Unless the property is located and has some kind of other higher and better use, maybe it's on a well-trafficked street corner, maybe it's on a very busy thoroughfare, maybe it's in a location next to a corporate headquarters where there's value over and above or outside of it being an apartment property, where I can come in there and maybe I can convert it into an office space for my corporation. I could come in there and I can put a couple of retail locations there. It's worth me going and doing that, maybe tearing it down and doing something. So unless there's some kind of thing like that attached to the property, these owners are stuck. And they make up the other half of the 5%. They're stuck. They can't find anybody to buy their properties. So what do? Do they just walk away from them? Here you go. Here are the keys. Do they come up to Mamdani? Hey, here are the keys to my property. Bye. See ya. By the way, I bet you some will do that if they haven't already. Some will do that. Or do they do that with their lender? Maybe there's a loan on it. Here you go, bank, credit union. Here you go. There's no way this is going to work. Okay. You'll see that. And I'm sure that has already happened as well. And with the people that I talk to that own multifamily in New York, they have been struggling for years, and this has been, obviously the thing that's really pushed everything over the side. So that's the other part. The other half of the people that would own apartment communities in New York are people that are pretty much stuck. They're going to ride it out, do the best they can, try to get everything they can out of all of the hard work, time, effort, and energy that they put into their properties, especially in terms of riding the horse this far with what they've done. They got nobody looking to buy. I mean, we just said how many investors would go buy there, and we pretty much said 95+% of investors aren't buying anything there. So they're stuck, okay? So they're stuck. Those are your only two prospects of buyers of multifamily properties in New York, outside of the frame that I talked about in terms of maybe it's got a location that's busy, commercial, it's got potential there, etc. Okay, that's the effect. That's the effect. So we talked about the effect of running away, not wanting to invest in multifamily in New York, but that's the effect if you already own it. What do? Not much you can do other than here's the keys, or just try to struggle through it. Or you're someone that's more of the social work owner, and this is kind of your thing. You're behind the cause. You're behind this. This is what you want to do, and you're moving forward and being heavily involved in it. Okay, and so that is really the effect. And so who benefits from this effect? Okay, so who benefits from this Mamdani effect? Now, we've already talked about there will be people that love the collectivism part of it and think that the benefit of having as low and as cheap, maybe not even paying rent. Maybe it's I don't know, but let's just say cheap rent as they can get. They're all about that. They're all about that affordable part of it. And so, you got that group that's all in on this. And of course, I'm sure there's a heavy contingent of them that voted for the mayor in the first place. So they love it, of course. The people behind the cause, they love it. Not a surprise there. And enough people love it. Otherwise, the man would not have been elected. Okay, so there's that. But here's who else loves it. Not only the obvious people love that, but the media loves it as well. The media loves it. The media is all over this. The media absolutely loves it. The question then becomes this: how long is this going to last? So when you're talking, and I talk to a lot of people, a lot of investors, a lot of managers, a lot of asset managers, fund managers, family offices, I talk to these guys a lot. And so the consensus among most of them is this is temporary. So what's going to happen is they'll figure out that it sounds great, but applied, it's a disaster. I'll just oversimplify it that way. It sounds great to do this. Many people think this is, the answer to the affordability problem in places like New York. But it's going to, after they figure out that, yeah, it sounds great, but in practice, it's a nightmare. This is all going to get turned around and changed. Most people I talk to have that opinion and think that's what will be the case. I disagree. Now, do I disagree that they will find that this in practice is a disaster? Yes. I mean, math is math. And at the end of the day, the math isn't going to work with this. Not only in terms of short-term math, it might look like it can make sense, but long-term math, investment, those kinds of things, it's not going to work. So I agree with them that in practice, it's a nightmare. It ain't working. I agree with that. However, I don't agree that it's going to go away. As a matter of fact, this isn't going anywhere. It's going to get worse. So the other part of the Mamdani effect is you will now see communities that were really kind of playing or having conversations with this, maybe behind closed doors, maybe sometimes not behind closed doors, but just having conversations about it, now start to enact similar kinds of policies. You're going to start seeing this more. You're going to start seeing and hearing some conversations where they weren't being had, or maybe at a lower level in some cities, in some markets. You'll now start to hear and see these coming up as a result. This is not dying at all. This isn't dying. This is going to continue to get momentum in other places, especially the more left, or as some would call it, the more blue the city is, the more you're going to see this enacted and see what I would call copycats in terms of this happening. So it's going to get worse. It's not going to get better. Hey guys, a lot of people contact me and want to know, where are the best resources when it comes to investing in multifamily? Where can I go? And the obvious answer is darrengarman.com. 99.9% of all of the items on the website are absolutely free. Start making that multifamily investment that you've been thinking about a great reality. That's another thing you can, I think, look forward to when we get into 2026. And probably one of the final things I would say about this in terms of its effect is really a reminder. And this is a reminder if you're an investor watching this. So if you're an investor watching this, especially if you're a multifamily investor, for years I have been telling you that before you make any investment in any marketplace, any city, any state, the first thing you need to do is make sure that there's political alignment with your politics and values. Okay? You've got to make sure that. And by the way, it doesn't matter if you're left, if you're right, if you're blue, if you're red. This applies to you no matter where you are on the spectrum. Okay? But at the end of the day, you better make sure wherever you're going to invest, you don't take this lightly. They better be at least somewhat aligned with you politically and philosophically. Because if they're not, you're in for trouble. And I guarantee there are many, many investors right now sweating, worse than sweating, that this is going on, where they did not consider this, even though they knew that if they would have read the room, that this could be coming before they invested, either by buying an apartment community there, or maybe investing in some kind of a partnership that owns apartment communities there. You better make sure there's alignment with you politically and philosophically before you make an investment. So, by extension, I get calls, because I'm in Iowa, I get calls from real estate brokers. By the way, speaking of real estate brokers, how'd you like to be a real estate broker in New York right now selling apartment buildings? You think you got much business? I mean, you're going to be cold calling 24/7, and not much is going to be happening. But I get real estate brokers from states like Illinois, states like Minnesota, for example, calling me, basically saying, "Hey, Darren, we've got this apartment property for sale. It's available. Why don't you?" I'm like, "No, don't even bother sending me information. You may not even, don't even bother calling me when something comes up in either Minnesota or Illinois." Now, do I have a problem with Minnesota or Illinois in and of them being a state? No, I don't. But do I have a problem with their politics when it comes to investing in multifamily? You're damn right. Do I have a problem with their politics when it comes to things like we're talking about? You darn right. Minnesota and Illinois are really, really bad in terms of my philosophy, my politics when it comes to investing. So I stay away from them. Again, if you're not me and you're somebody else that is more liberal, you might be all about it. But no matter what side of the fence you're on, you got to have that conversation, and you got to make those decisions before you even think of investing. Remember, politically, philosophically, you better be there better be some agreement there. Otherwise, you don't want to find yourself like many of these other investors that own real estate, multifamily real estate in New York, wondering what the hell are they going to do? What's going to happen? What is going to be the future for them? We've talked this 2026, one of the first 2026 episodes, about an effect, about the Mamdani effect, and the various things that go into what's happening just in one city, in one state, in the U.S. Now, it is the biggest city in the U.S., but nonetheless, look what happens with one city in one state, and the effect and the impact can have from that. And I ask you to take away from this podcast whatever you think you need to take away from it. Hopefully, I provided you some insight, some information, some things to think about, not only in terms of what's going on out there, okay, but in terms of your next investment, what to think about, what to do, and maybe in some cases, what not to do. All right, have a great day. Thanks for joining me again on the Heartland Multifamily Show, the place for all things multifamily. All right, see you later. Bye-bye. If you want to get your hands on more great multifamily real estate content, make sure you click here. If you want to invest passively in great multifamily real estate, make sure you click here.